and see how one negative trading strategy may impact another trading strategy that might focus on something different if it's spread among just individual markets or instruments or a category of instruments, like, for instance, currencies versus commodities, that sort of thing. Another big one that's going to happen is from an economic and political standpoint, where there's more and more, call it manipulation, less clarity in the Western markets. Other markets will come about, and trading volume will go to those markets. I can think of the Mid East. I can think of some up and coming Asian regions that are not yet on the roadmap, but may come and have the new trading capital or just new trading opportunities. Um, so Australia is a good example of that, because I see Australia becoming more and more relevant, because they're more resource based. They have a big import export market to China that impacts their Australian dollar and the like. Um, so good things can come out of Australia because of that, including trading and their trading volume. Um, then we get into the generative modeling based upon the development of AI. Right now, I can't remember the name of it, but we're going to get into just uh, general AI, where it's going to be much smarter than what we have now. Um, and then, of course, we have the different market microstructure analysis, and there's different ways to measure that through order flow, or I call it hot capital flow. It's a huge deal. Needing to know where that capital is flowing to, is that volume, and it's a volume that's going to drive new markets and drive up other markets. So liquidity and volume is very important there on the cash order flow or the capital flow. So out of all of that, I've said this before, um, with the Python, it's easily by a long shot now, it's the most popular language out there for a variety of reasons. For those that may be in the know or not in the know, Python's easily the best language out there. It's easy, simple to use. It's a fairly rich ecosystem, as I said. You have a lot of the AI toolkits out there, TensorFlow, NumPy, Pandas, Scikit-learn, Torch, and that's all used in the data science world, machine learning, and now, a very important way, financial modeling. With Python, it's easy to adapt things for a variety of things, for ingestion, strategy development. That's from a financial perspective. And over time, AI is going to take over everything. I mean, it's already there, uh, and just coming standard now. Python has a really good support system in the community. If you look at mine, I'm trying to develop out mine through my website. Um, there's a whole pile of resources out there. Python can integrate in a lot of different areas, Windows, Linux, the like, and development is easy. A lot of quant research and trading is done in Python quite easily. So essentially, as I said, all these projects are now being uploaded to my Quant Elite. You can find out more information there. Um, and this is just the start of it over the next few days, what I'm doing here. But as I said, with it, you can start in Python at the top level, what you download, and then you can use AI to advance that coding and actually convert it into a production ready C++ as well. You'd save a ton of time and frustration as well. So there's just a lot of stuff here that you can look at.